I think we're kind of covering. Well, fantastic. Welcome to the Bridge Association of Realtors Becoming a Homeowner in the Bay Area. I'm Susanna Hart with Guild Mortgage. I will be the moderator today with these wonderful panelists. And we're going to go through several questions and kind of open up some of the myths and make sure that you get really great information here on down payment assistance and financing programs for first-time home buyers. So to get started, I think what we may do is have each panelist sort of introduce themselves really quickly, how long they've been in lending, or who they are, where they are, how long they've been in lending, and what got you started doing down payment assistance programs. So let's start with Elva.
Hi, everyone. I am Elva Wormley. I am with C2 Financial Corporation. I have been in the mortgage business since 1981. So in August, it'll be my 41st year in the mortgage business. And I've done it all: underwriting, managing salespeople, everything in the business. And what started me with the down payment assistance programs is really trying to get more of my peeps in homes, and also just seeing people struggle with coming up with a down payment, and especially now in the Bay Area. So I've been doing down payment assistance, for a long time, back in the early days when we used to say Calhaffa. So I can't even remember when I started doing down payment assistance. I think it might have been somewhere in 2000, I think, somewhere around there. Yeah. Oh, can't hear you, Susanna.
There we go. Sandra, how about yourself?
Hello, I'm Sandra Smith, and I have been with Guild Mortgage for this year makes 10 years. I started in the mortgage business 2.5 years prior to that. I was with another company that really wasn't a fit for me, and I didn't quite understand why, but we were kind of programmed to tell our clients that down payment assistance had dried up and it wasn't available, and this was in 2009. And after kind of speaking with other loan officers and other companies and just getting out a little more and learning more about the industry, I found out that that was a blatant lie. And so I had been lying to my clients for 2.5 years and said, whoa, and transferred to Guild. But that is why there is just a huge need, especially in the Bay Area. But overall, generally for people of color, especially, to have some other opportunities to be able to obtain home ownership. And so I found it was extremely important and wanted to make sure that I was not lying to my clients in the future.
Very good point. Very good point. Renee.
Good afternoon, everyone. I'm Renee Tucker. I'm with Primary Residential Mortgage, and we are a direct mortgage lender. And I've been in this business in real estate for 30 years, and this is my 29th year as a lender. And I've been a brokers over the last, I would say, 10 years. I've been in mortgage banking. I've been with Primary Residential 7 years. And as far as down payment assistance, I've done it on and off, but really when I came to Primary Residential, I kind of brought that down payment assistance to our division. And being with a company that has very little overlays and are very committed to putting people into housing, I found that we were able to bring, down payment assistance, and I've been spearheading as many programs as possible to get them through our corporate office and get them approved and provide them, because there's just a real need for it. when people are available that want to buy, but the thing that's holding them back is they don't have the funds, then, it's really our responsibility to be ready to help them.
Excellent.
Thank you.
All great. Yeah, fantastic. So the first question that I have, since a lot of you have utilized a lot of the various programs throughout the Bay Area and state, what programs do you use the most? And what programs don't you use that are out there, but you hear about them a lot? Kimberly. Oh, I forgot to introduce Kimberly.
I'm like, how could you forget about me,
Kimberly.
Susanna?
Oh, my go-to.
No.
Kimberly, please introduce yourself and then we'll get to the first.
No problem. Well, first of all, thank you for inviting me, and I thank you for seeing this wonderful panel. I love seeing the makeup of this panel. It's fantastic. Susanna and I go back a way, so it's easy for her to just forget me because we have that relationship. So I have been in the mortgage industry for 30 plus years, and I'll make it short and sweet. Like most of you, it was important for me to be able to work within my own communities, as well as reach out to many other communities that just needed assistance. So I think, many of us have that same sentiment and have, bridged that gap for even the companies that we work for. I'm with Bay Equity. I've been with Bay Equity now for 6 years. I have a background in banking, where Susanna and I met. So I'm just happy to be a part of it and happy to be able to service the community that I work in.
Well, fantastic. Well, we'll go into now the next question. Sorry about that, Kim.
No problem.
What programs do you use the most, and what programs that you hear about a lot from clients? Because I know I get a lot of questions myself as a loan agent, but there are a few programs that I tend not to use as much, and it's maybe more from the benefit of the borrower than it is for other reasons. Renee, why don't we start with you? What programs do you use the most, or do you find yourself gravitating to, and what programs don't you find really that helpful?
Well, probably the program that I use the most is through California Housing Finance Agent, CalHFA, because number one, they don't run out of money. Number two, we really started doing them when they finally realized that they needed to make it so that we could offer these programs and they wouldn't be, for free. And number three, California Housing stepped up when they saw that home prices in the state of California were going up, and that there were people who with those home prices and even higher incomes needed down payment assistance. And so California Housing is really the only down payment assistance program that's going to do high balance conventional loans. Most of the other ones are not going to go above the conforming loan limit, which is, $647,000. And so it's just become very flexible. Their rates, even in the hiking of the rates that happened recently, still seem to offer the best benefit with the most down payment for most people. So that's kind of my mainstay. There's been other programs like Golden State Financial, who has 2 programs. But unfortunately, there's just not much that they are able to offer right now for most people. And then what I try to do is to be able to fill in where we need to. So for example, Lyft is out there, and so we can use Lyft. And then we're able to fill in with some cities, some gap programs like CalHome, and also some of the cities, but they don't have much money, so that's sparse. The city programs are sparse. because a lot of cities still don't have money. And the Cal Home program has income limits, but it's not offered in very many counties. So, just try to be able to work through some of the nonprofits and see what kind of money they have. And then, of course, since CAR has now come up with the closing cost grant, that has become very, very important to be able to offer to people who qualify for it, because they need closing costs.
Fantastic. Sandra, do you want to go up next on that one?
Oh, you're on mute.
Thank you both. I was saying I found, similar to Renee, that there have been challenges with the down payment assistance programs with Cal HAFA. It is really the only program that addresses the person who's kind of medium income and not all the way under 80% AMI, et cetera. And so that is helpful. But if you're trying to stick with conventional, the assistance is not quite there, even with Cal HFA, I should say, because of the hits that happen with the high balance.
High balance.
And so
Expensive.
therein brings about more problems as well. I have found that I am most commonly utilizing programs like AC Boost, San Francisco Mayor's Office of Housing, because they tend to not run out of funds in the same way. There's a bigger bank to draw from, and the people are educated a little more about the program prior because of what they have to go through for the program. The other thing that I've noticed a big uptick is with BMRs. I most recently have had a lot of clients coming in, and people don't understand that below market rate properties are a type of down payment assistance because that's being subsidized. So I do find that that's being utilized a lot more as well, Susanna.
Thank you. All right, Kimberly, what about yourself?
Yeah, again, it's the same sentiment as everyone else. I still call it Cal HAFA.
Thank you.
I just can't get away from it. Because of the higher limits, because of high balance, it's a go-to. As of late, not as much with the bump in rates and with the adjustments. I am finding that I'm using the half down payment, the closing cost assistance right now quite a bit, because we can go up to 120% of the median income. So that helps with that boost. And then it's really just being very selective depending on who the client is and which category they fall in. So everybody's situation is a little bit different, but those are primarily my go-to. And hopefully, we'll see a little bit of bump in the AMI next week. So that will help us. But right now, because of the resources that are out there, Cal HAFA is definitely going to be the go-to.
Okay, and Elva, what about you?
Well, I'm with everyone else on the Cal HAFA. As a matter of fact, I just was qualifying someone, but the payment amount was outrageous for her. She's buying a condo. She's in contract. And her payment's going to be over $7,000 a month, $890,000 condo in San Francisco. So California Housing Finance Agency is great. The rates are really high right now, and with it being high balance. But if I have buyers who are not in the high balance, then my go-to is my favorite, the Grow Daisy program. But the issue with Grow Daisy, and I do them, is that the maximum loan amount is $647,200. But it is totally my go-to because there's no mortgage insurance. They only have to come in with 1% down, and they get a 2% forgivable second. And you can do that on 2 units or 1 unit. So that's my go-to. But I also qualify people on the Chenoa program. And there's a new one that's similar to the Chenoa. You don't have to be a first-time home buyer, and it's very similar. So those are my, and they're right now at the conforming loan limits, not the high balance limits, but they are planning to but Chenoa will go high balance. But again, the interest rates are so high that to qualify. But the big thing about Chenoa, which is good, is you can have a 600 credit score. A lot of these programs require a higher credit score, 600 credit score, no income limits, and you don't have to be a first-time home buyer. And we can do high balance with the Chenoa. So that helps. So I do that. I offer that. Whether people actually close on them is another thing. And it's not because when we get to the myths, when we get to that, that's whether sellers accept offers with some of these programs are another challenge, I think.
That actually brings it up. Right. Perfect. The next question. So why don't you start this off then? What are the myths about buyers who are trying to put in offers with down payment assistance? And also, how do you overcome some of those challenges that listing agents have with these myths? For example, the big one I see a lot, Cal HFA, that's an FHA loan. No, it's not.
That's right.
Not
That's
all.
right.
So why don't you take that one off, and let's start with you for that.
Okay, the first myth is with the Cal HFA is how long it's going to take to close. Now, in this market right now, we can close a Cal HFA loan in less than 30 days. And so that is not an issue, but a lot of people think it is an issue. The second issue is they think it's an FHA loan. And actually, it stands for Housing Finance Agency, HFA, Cal HFA. And so the next thing is they think that termite reports are required on FHA loans, not required. So those are the myths that I see is how long is it going to take to close? But the biggest challenge, I think, once you overcome that, especially now in this market, is the appraisal. Because most listing agents will look at an offer with down payment assistance and say, what happens if the appraisal comes in low? Because 9 times out of 10, if that buyer is coming in with down payment assistance, they don't have money to make up the difference in the appraisal if it comes in low. So I think that is one of the issues. But again, it takes a whole lot of selling. It takes us as mortgage professionals to talk to the listing agents. And I think they just want to know it's a solid deal. So one of the things that I do when my clients are putting in offers is I do an automated value report immediately. And I look at it, it gives me a range, and then it gives me what 9 times out of 10 that appraisal is going to come in at. And if I see it's going to be lower, I'll reach out to the buying agent right away and say, look at this value report. What do your comps say? Let's go over the comps. So anyway, that is the biggest issue, I think, with this that I run into, is their concern about the appraisal and what if it comes in short.
All great points. Renee, can you add to that, or do you want to?
Yeah, I agree with what she said as far as the myths and you know what I try to do is, number one, talk to the listing agent once an offer is put in, introduce myself as the lender, and ask them if they have any questions about the buyer's financing. And then what we do is, I can't really write a pre-approval letter unless I have actually submitted that loan for credit underwriting to my underwriter. So, so that's another real plus, because in most cases, I'm able to do that, pretty fast when I get an application in, do my due diligence, run my AUS, and then submit the loan so that it's actually underwritten with conditions. And so that's kind of gonna strengthen the loan that the borrower has. And it gives us a way of being able to close very quickly, because like Alva's saying, we close those anywhere from 21 to 30 days, because we do everything in-house, and we know how to submit it to CalHAFA so that that review goes really quickly and we're ready to draw docs. And so you really have to talk to the listing agent, to the transaction, and assure them that your client is solid, and that you can close quickly, and that there's not going to be any issues with the program.
Fantastic. All right, Kimberly, you want to add?
Yeah, I'm definitely going to piggyback off of both Elva and Renee, because I think the communication with the listing agent up front is critical whenever you're doing down payment assistance, because you want them to be clear 100%. And the appraisal piece is a huge component of that. So as long as they understand, one, the borrower has been pre-approved, so that's not an issue. Timing is not going to be an issue. It's making sure they know and they have priced the property correctly, to work with them so that they understand that, the appraisal piece is the big piece, but it doesn't have to affect the closing of the transaction.
Excellent. Sandra, you want to jump in?
Agreed. The only thing that hasn't been mentioned that I continue to still hear is that with the down payment assistance, are there other things like we have to review the inspections, and that fear of, if I accept this, then all of these other conditions will come about, and that needs to be dispelled. And so I'm very similar to Renee in that I beg my buyer's agents to connect me with the listing agent. I like to speak with them even before they're reviewing the offers, because I am able to say that this person has been through DU and most times has been previously underwritten by the actual underwriter, and we're ready to go. It's just a matter of you allowing this person to get into the home.
Fantastic. Fantastic. Thank you. So now that you have an idea of all of the pitfalls and the things, and you all pretty much agree, how do you keep your realtors involved and educated on this piece as well? Because that too, your buyer's agents are really good team members for you when you're out, sending your clients out. How do you keep them updated? What sort of marketing materials do you refer to and keep your agents all educated as well? Sandra, you want to start this one off since we ended last time?
Thanks, Susanna. I actually subscribe to monthly update of changes in the market, programs that are available, and I send that to my buyer's agents as well. If there's anything large, I typically will call my realtors. It's really important, as we all know on the panel, to have close relationships with realtors. Otherwise, where are we getting our business? And we're in this together. And so as soon as something comes up, I will get on the phone or shoot an email to my agents to let them know, there's a change. For example, Golden State had the wonderful program for first responders, etc. And I was utilizing that like crazy. And then they changed the program where it wasn't a grant anymore, and now it's this and that. And I had to really get on the horn and say, hey, wait, it's still around, but there are differences. So communication is essential.
Excellent. Excellent. All right. Kimberly, you want to go next?
Yeah, again, it's definitely the communication with your partners, because I think all of us do marketing to our agents. The one-on-one communication, and if you can do a lunch and learn so that people can stay abreast of what's happening. You know, things are changing rapidly. And so what I try and do is reach out, if not on a weekly basis, a bi-weekly basis, to my contacts and just inform them and say, hey, how's your business going first and foremost? But let me just share with you what changes may be coming about and what's available. What are we using right now? So I just think picking up the phone and communicating with our agents is the best way to communicate that.
Excellent. All right, Renee.
I agree with what's been said. Definitely with the realtor partners I'm working with, if something comes out new or a change that I think everybody, they should really know about, I'm gonna pick up the phone and call them. One example of that was when Cal Haffa came out with the equity builder down payment assistance. I mean, I looked at that and I was like, this is big. If the person meets the income limits of 80% of area median income, then this is big because 10% of the purchase price will allow some people to qualify for what they didn't qualify, is fully forgiven, so those kind of things, I was eager to get that information out. And the change where where Cal Haffa 700 credit scores would go up to 50% DTI. That was important, so I would reach out, particularly if we had any clients that we've been talking about or whatever. And then, I do blasts monthly and weekly about what's going on with programs and things like that. So, you just really have to stay in contact and communicate.
Fantastic. Elva, you want to piggyback on all of that?
All of the above. And I just recently started doing videos. I don't think I'm very photogenic, but I did a video on the Grow Daisy program. I started with that one because I think it's such a great program, and I share it with my partners, but also on LinkedIn and social media. And I'll be doing one coming up on Cash Compete and down payment assistance with 580 credit score. So I will be putting that out there as well. That's a new program that I have.
Fantastic, fantastic. All right, so now this next question is for all of you, something to really shine with. We all know that there are pitfalls. We've heard a few of them already with programs, suddenly being gone with money, and what do you do? And also appraisal differential issues. We've got closing times, AMIs, they go out to a county that they no longer qualify under 80% type of thing. What are some of the pitfalls and achievements that you have been able to overcome individually? It can take a little bit more time if you've got somebody that really pops into your head, because I know I've got a few from my background where you just really came through and were able to utilize these programs to put somebody into a home. And you have probably one of the most grateful clients that you will ever have in your life. Why don't we start with Renee this time around?
Wow. Well, I would say as a lender, the pitfalls, and I think that one of the main things is that I can't remember a down payment assistance loan that I started out, we're in contract, that I didn't close. And the reason is because of the fact that I'm a little anal in the beginning because I dig out everything. I look at all the guidelines. I want to, really be thorough and listen to the client because I just hate surprises, and I hate for my clients to be surprised. And so better that we spend the time up front when we're doing the, pre-qualification, pre-approval, in looking at all of the information thoroughly. And, the great thing is we have underwriters for our division where, we can just call them up and go through the scenario, answer those questions, find out what we have to do, and get it done. So actually, now that you mentioned that, I am thinking about one client in particular that is down in the Southern California area, and he's out looking for a home now, but it's been probably almost a year of working through all of these layers that popped up when we started going through, his finances and his debt and all of that, and working on educating him about that, because some of the stuff he wasn't even aware of. He started FHA. He had excellent credit. We ended up in speaking with my underwriter, and she spent a lot of hours too. We ended up being able to switch it over to conventional because we were allowed to exclude some debt with a conventional loan that we wouldn't be able to exclude if it was FHA. And there were times when he was just ready to give up. And I was like, no, we're not giving up. We are not giving up, because I know that we can do this, but we've just got to handle this. And you have to know what's going on as well. And I got on the phone with him and handled some of the stuff with him that he needed to handle. And so I think, those are the achievements that I like, is because I'm able to really pull through and make it happen. And doing the work in the beginning to avoid some of those pitfalls that happen that you just don't want to endure.
Exactly. Well, and you said he's out looking now.
He's out looking now.
Right.
He just made an offer. And I had a call from the listing agent asking for the DU. And I called the listing agent back and I said, I wanted to talk to you about this client because he's fully credit approved. He's been fully underwritten, and he's solid. So yeah, I'm really, that was a lot of work.
Well, here's to getting that contract accepted. That
Yeah.
would be wonderful.
I'm hoping so.
Fantastic.
Yeah.
All right, Kimberly, what about yourself?
I think we all have those stories that we could dig deep in and go into, if it's conventional or FHA, and,
Right.
really working for our buyers. And even, I have been doing this long enough, and I'm still triple checking myself because the guides are changing often. And so, I have been caught with one small minute things, which made me adjust really quickly. So I think of a client that closed at the end of last year, and she was actually purchasing a condo, and it was one that could have gone either way because her income was really on the borderline of just meeting the guidelines for the AMI programs. So we got a little bit creative, and we layered upon layers of down payment assistance. So we ended up utilizing an FHA first mortgage because we could, use less qualifying for those deferred student loans and things of that nature. And when we were able to use the LIFT program, and then half came out. So, we were just kind of grabbing where we could. And we were really focused on grants for her because we knew that there was going to be something that came up that would allow her the freedom to do what she needed to do. So that client was also buying a condo. And so it got a little bit complicated. The condo did not have FHA approval. So we were able to go in and do that, what we used to call back in the day a spot loan, and get that approved. But I think for me, she was so very grateful. I have 3 of her relatives right now that I'm working with. And I think it's just rewarding. It's very rewarding when your clients and the buyers and even the listing and the buyer's agents really know and appreciate how hard you work for this, for them to close their deal and to get them into their new home. So I would have to say that was my one that sticks out in my mind right now.
Beautiful, beautiful. I mean, not only did you have the buyer and all this layering, but you had the property that you had to deal with.
Yes, yes.
So,
That part was really interesting to do that. And I used to do spot approvals back in the day when they were not very uncommon, and I hadn't done one in a while. So the being able to identify that up front though, when we had to flip her from conventional to FHA because of how we had to qualify her with the debt situation, we then had to contend with, okay, we don't have FHA condo approval. So now we have to go in and make sure that we can get this one, fingers crossed, approved. And we did it successfully. And it was actually quite prompt and FHA and HUD turning it around. So we were very pleasantly surprised, I'll say.
excellent, excellent. That sounds like a wonderful story that, just is inspiring.
Yes.
Sandra, do you have anybody that sticks in your head that, you go to sleep at night when you have rough loans and you think, oh, this person worked out so I could do it again?
That's a hard one. For me, I think more when you talk about hurdles, etc., it's important that everyone within the process, the lenders, the agents, the clients, remain in close communication throughout the entire process, because one person might remember one thing, and no matter if you're repeating it 17 times, if it's something they don't want to hear, they don't hear it. And when everyone is on the same page and communicating, the process is just much smoother. And so for issues, for example, like the property issue Kimberly brought up, keeping everyone involved with that, because you tend to have patience for certain things and not for others, and certain things you just can't get by very, very quickly, but it can be done. And in our world, everything's supposed to be done in an hour, and certain things take 2 days, and that's not the end of the world. And, it just means 2 days later. It's not like open heart surgery, but it's extremely, extremely rewarding when you have a person who, it's like, oh, forget it, I'm walking away, I just can't do this, and I'll just rent the rest of my life. And you're like, no, you can do this, and we're gonna do this. And then afterwards they're like, oh my God, I'm a homeowner. And so you forget, and that's what, why I can't, you forget all of the struggles because you finally met the goal. And that's extremely rewarding.
Yeah, exactly. When it all comes together. Elva, do you have a wonderful story for us?
Well, when you said that, I was thinking of a client. Her transaction closed in May on the Grow Daisy program. And I tell you, this was one loan that I couldn't even sleep at night on, because literally we closed the client with a student loan with similar letter documentation that was approved by the underwriter. Well, this client, the one that closed in May, for some reason, there was not, and I figured it out, but still, it should have been okay. Her student loan letter was not okay. And that is a challenge right now. The student loan letters there's specific information that underwriters are looking for on the letter. We thought we had it. I have an assistant, and I've been an underwriter. So I looked at it, everything looked great. So of course she got into contract in March. We didn't close this thing until May. I'm looking at it right now, May 13th. But she closed on the Grow Daisy at 3.875 on May 8th. Yes. So I said, God is good, because I worked this thing. You have no idea. I worked the underwriter. I got on the phone on a conference call with the student loan people. I said, look, this is specifically what the underwriter wants to see in the letter. They said no. I said, let's escalate it. I need to talk to the manager. She's in contract. She's going to lose her deposit. We got to make this happen. And in the meantime, we were so blessed. The listing agent and the sellers were just so awesome with the situation. Like I said, she got a contract in March. We closed May 13th. And also the Grow Daisy program extended her rate lock at no cost at the 3.875. I mean, we just made it work. It was like, and it was a miracle. And she's a single mom. And I mean, we cried, we literally cried, but what came out of that for me, and I've been an underwriter for 10 years. I worked for Bank of America for 10 years before going on the side. What stood out for me is that two things that I think are challenges: student loans and variable income. Those are things that weren't such a big challenge a few years ago. I don't know about the rest of you, but so now we give the underwriters now the student loan letter up front. Because what happened on that file is they conditioned for the student loan letter. And when they got the letter, it didn't say what they wanted it to say. So now I'm getting student loan letters up front, getting them reviewed by an underwriter and cleared up front. And the variable income is another thing. It's a weird thing. Are you guys dealing with that too? Yeah. So those are the two. Yes. I'll give somebody else a chance to talk, but yeah, but I felt so blessed, and everybody was so thankful that when this transaction closed, for this particular person with the student loans, it was amazing, really a miracle. And to get 3.875, 1% down, no MI in May.
Amazing.
Yeah.
That's amazing.
Well, we
Yeah.
do have
Yeah.
some questions, or unless anybody wants to continue piggybacking, we do have some questions in the Q&A if you all have a moment here. We have one is, what is Lyft? Who would like to take that one on? As you don't, I'm going to call on you. Lyft. Sandra, you want to talk about that one?
I was saying Renee.
Okay.
Or Renee?
Neighborhood Lyft. Neighborhood Lyft? What is
Yes.
Neighborhood Lyft?
Yeah.
Okay, so Neighborhood Lyft is a program that is not always around because the funds actually come through the Wells Fargo Foundation. And so I don't know what their premise is as to how they come out with those funds. I think the round that is still going on now started last year.
Mhm.
And prior to that, the round before that was like 2018. So it's not around all the time. And cities receive a certain, through nonprofits who administer them, receive a certain amount of packets for the amount of money. And it's, you don't have to be a first-time home buyer, but there are income limits, and there are certain counties that the money is administered through. And so this cycle here is a little bit unusual as far as how long it's gone on, because what happens is the person qualifies for the Lyft program. Their funds are reserved for like 90 days, I think.
Yeah.
And at the end of 90 days, you can't extend it the money goes back into the fund, but you can reapply. And I think just because this happened during COVID and we had interest rates jump up, that many people fell out of contract, couldn't get into contract. And so that money is still available. So in the Bay Area, it's for Solano, Alameda, Contra Costa, San Francisco counties. And this round, it's $25,000 per individual. And the other thing is Lyft will go in different positions. So you can layer with Lyft if you have other financing that will allow that. And so that's what Neighborhood Lyft is.
Can I piggyback also?
Yes, please.
So to participate in Lyft right now, they open their portal so you can go in. A client who wants to apply for the program, you have to apply every Thursday morning is when they're checking to see how much they have available left, and they will open it up for new candidates to come in and apply. And again, it's income driven. It is $25,000 per household. So if you are qualifying with another individual, you can't get a combination of 50,000. It's going to be per household size to receive the 25,000. And I'm encouraging still all of my clients that meet the criteria to push in and, get it set up on their computer at 8:58. So that because it's competitive, and be ready to make sure that you can get in and get that reservation if you're actively looking.
And do any of you want to speak about the use of these funds? Because they are not necessarily for borrower minimum investment on a few products, because it is privately sourced funds. Does anybody want to talk about how it's used, conventional versus FHA?
Oh, yeah. That's another issue that you have to be aware of, because if a buyer is qualified as FHA, then that money is not considered to be a community second from HUD's point of view. So the buyer still has to find money for their minimum 3.5%. So that has been that's been something that can stop people, and you've got to kind of jump through some hoops if they don't have that minimum 3.5%. And you can layer it with CalHFA though, but again, everything's got to line up, credit scores and county that you're in and all of those little check boxes. Wow. So there is that caveat. If they're conventional, then if they're doing 3% down or 5% down, then they can use the Lyft funds for that. So yeah.
And what about the payback terms on the Lyft funds?
I'll talk about that. It stays on as a lien for 5 years. And so if you refinance or sell in under the 5 years, it's prorated. So for example, if it's 2 years, then you still would owe the $15,000. So it's really important to be very communicative and let the buyers know that, yes, it's a grant, but it's not really a grant until after 5 years.
Right.
Excellent, excellent. Those are wonderful points to bring out on that. Now, on the CalHFA program, the 10% forgivable equity, can you combine that with, like, say, the physician's loan? Any of you are doing that physician's loan? New doctor? Or you? No?
Well,
I'm not doing the loan.
Yeah, CalHFA, you have to do it with the CalHFA first.
Right.
Yes.
Right.
And so their CalHFA first programs are, FHA and conventional. And it's not the doctor program, even though that's a conventional. So you can't combine it. And the other thing is you can't, with the equity builder loan, you cannot combine that with any other financing. You can, however, use the CAR HAF grant with it because it's a grant.
Mhm.
But CalHAF is not going to, allow anything else to layer onto that 10%.
Easily, yeah,
But
easily.
it's fully forgiven after 5 years. So, wow.
Right. right.
That's why they call it an equity builder, because, you're really going to have some equity, and you've gotten the purchase price that is going to be fully forgiven and be a grant after 5 years. So,
Yeah, it's amazing. It's amazing because the equity builder requires second position. So if you do any other
Yes.
like community seconds, you need to check to see, will they go in third or fourth position, correct?
no, they won't allow anything with the equity builder. No
Yeah,
other,
because it's an
no other
equity builder.
financing.
It's an equity.
Mhm.
I just did
It's-
one that had the
You can
RCF
do the
and
regular
Lyft.
CalHAF.
I did equity builder and Lyft with the equity builder. I just closed.
Really?
Mhm.
Really? Oh, I didn't know that either. Oh, that's good to know.
So if you
I
have a
didn't think you could.
community
I'm
second
glad
that's
that I
willing to
did.
go in
Third.
the
Yeah.
third or fourth position.
Oh, okay.
You just can't use, what was the one I was thinking of that I wanted to use and they wouldn't go?
You
Like a
can't use their
PayPal.
zip. Yeah, you can't use their
Right.
zip with it.
You
Right.
can't
Yeah.
use the
Right.
zip, right?
Yeah.
But yeah, so
So you use Lyft with it?
I used Lyft and I used the RCF Black Builder,
Yeah.
Wealth Builder, sorry. And then there's also the Black Wealth Initiative
Right.
through CHDC. So check those out. Okay, so somebody's also asking about that closing cost grant. Who wants to take on that one? Who's used that a lot? I know that Kimberly has mentioned it a few times.
Yes, so the Housing Affordable Fund is initiated through CAR. You have to be I apologize, the agent who represents the buyer needs to be a member of CAR and NAR in order to be eligible. This is a closing cost grant that is forgiven at funding. There is criteria. We mentioned income limits. It is available in specific counties. You really need to work with your lender to make sure all of the criteria is met in order to be eligible. Okay, they don't qualify you from the standpoint of debt to income ratio or anything like that. The biggest standout is, to me, making sure that you fall within one of the protected classes that is identified in their handout, and then also the income restrictions. But it's $10,000. It can be applied towards the closing cost, and it's forgivable at the time that you close your transaction.
Yeah, it is a grant right off the bat. It's a wonderful one.
It's beautiful.
Yeah, if you're
I
not
just-
using it, use it.
I just
Um,
applied for my first buyer who's in contract to get that. And one of the things I think that we have to be aware of with all of these programs is the difference between the area medium income loan limits that are being used, because some programs are using state housing loan limits. And the CAR grant specifically says FHFA
Mhm.
AMI.
Yes.
So that means that we don't have the household limitations, and we have 120%, and
Correct.
it's a higher, it
Yes.
allows a higher income.
Yes.
And those actually went up in May, and will actually, I think Freddie's already got it in, and Fannie, it should be this week that it'll be in their tool.
Mhm.
So, 80% of the area median, well, 120% is going to be pretty substantial because I think the area median income in Alameda and Contra Costa is going to be like 151,000. So that's pretty good. 120%. That's pretty good.
It's huge and it's a big lift, particularly in the Bay Area.
Yeah.
You know, so now on to a question here that deals with the student loans. You know, we all just love student loans, right? We just want those
Mhm.
borrowers with student loans. Student loan forgiveness, they said the underwriter said that they would not exclude the student loan debt because the letter says that her file would be monitored for 3 years. So can someone talk a bit about the student loan forgiveness? Because every time it seems like I got a handle on the student loan stuff, they switch it.
Mhm.
Somebody's got their listening device in my cell phone when I'm talking to people. I got to tell you, because as soon as you tell them one thing, it's another. Quit laughing, Kim. Come on.
I think that, you know, again, I think, was it Renee who had the client, or Elvin
Oh,
that had the
me,
client?
I did.
Elvin had
I
the
did.
client.
Yeah.
You know, the letters, when you are getting the letters and that are speaking to the circumstances for the forgiveness or how the structure is for repayment, at that time, it's almost critical for you to speak with underwriting management, because we need to, because we're getting so many different variations of this, we need to know what is going to be acceptable, if we're going to have to count something because of certain language or not. And I think that's, you know, because it's going to constantly change and we're trying to stay on top of it as much as we possibly can. But at the same time, right now, you know, the most important thing for me is, specifically since things aren't reporting, right? I'm asking for information up front. Even if the loan is in forgiveness, pull up your student loan, see if there's a payment. Because when I start going in and doing my calculations, if it be a 1% hit or 0.5%, depending on how we're structuring the loan, I want to see if, you know, that's going to jive with their future payment down the road. If I can avoid using that and my 0.5% or my 1% is lower, then that's what I'm going with. And so, you know, I think, again, the student loans, I have resolved myself that I'm not going to try and make it work. This is the way that I can make it work, is say, get this for me up front. So then we can address this, and everybody, again, it comes back to being on the same page. This is what it looks like. And so, you know, we have to be honest up front with the buyer's agent so they understand. And it just comes back to qualifying them up front, so everybody, again, knows where we stand.
I agree. And whether I've seen a letter that looks like that before, I still want the underwriter to approve the letter. Because when people come to me and say, I don't have to pay back the student loan, that's not what the credit report shows. And most of the people who say they don't have to pay it back that I've worked with, I've never seen one come up with a letter that says they don't have to pay it back. I have one right now. And I said, that letter doesn't say that. It says you're making a $68 payment until next year, but it doesn't tell me what the payment's going to be following. And that letter, I was surprised. I turned it in for CalHFA and they'll accept that one. I was shocked because it only gives a payment, but it says she's on the pay as you earn plan or whatever. But there are, yes, but there are so many different student loan companies and plans, and you know, so the best thing for when I see a student loan on a credit report, the first thing I ask for is documentation. If they don't have it, I stop the process. I go, you go get that. It may take you a month to get it, depending on who you have your student loan with. If you need me to get on the phone with them, I will. But we're not doing anything till I see that letter that says what the terms are. And most underwriters want to see it say for 120 months or 240 months or whatever, 300 months. They don't want to just see a payment for 1 year, you know, or that it's forgiven for, or forbearance, or deferred. They
Mhm.
want to know what the amortized payment is. And I think if you read the Fannie Mae guidelines, it says that specifically, you
Mhm.
know, so anyway, yeah,
I haven't
documentation.
seen a forgiven student loan letter yet.
I haven't either.
I haven't seen anything that says the student loan is forgiven.
It's-
It's
Neither have
been a while
I,
for me.
Renee, yet. Yeah.
Yeah,
It's been a while for me. I have actually seen a client who had a letter that said it will be forgiven, and it was within the next 6 months, which was wonderful. Didn't count the payment. But that's the only one I've seen in all the years that that's been around.
you're right. That one sounds like a great letter because I haven't seen that.
Neither have I. And I haven't seen one either, Renee. And buyers will tell you all the time it's gonna, oh, well, here's what you get. Because I have a lady right now, she's a teacher, and she says she's been teaching for over 10 years. So therefore it's gonna be forgiven. And I go, okay, you've been teaching for 10 years and it's not forgiven yet. So
It's not
you know.
forgiven yet. We gotta count something.
Exactly, exactly.
So I'm gonna
Yes.
jump around on the questions here because I think there's one in here that I know someone on this panel works with. Do any of the lenders on this panel work with AC Boost or the DK Dreamer San Francisco, Sandra?
Yes, there, I spoke about that. Yes, I do.
And they have to first go through the screening before they go out shopping.
Correct.
So one thing I find with a lot of these programs that as a lender that I like, and y'all can jump in on this, having these programs where the borrowers get screened before they go shopping is absolutely amazing. Right? They've done the work for you.
Mhm.
So those bumps in the road are not going to be as bad. Renee?
Yeah. AC Boost, I do AC Boost,
Mhm.
and I just went through the training for San Francisco. And AC Boost was supposed to be modeled after San Francisco.
Correct.
I think from what I saw with San Francisco, they probably are doing more loans than AC Boost. So I think that it's good that they are doing the workshop. And I can't speak to San Francisco because I haven't actually finished and started working with them. But with AC Boost, I still feel that the lender is not brought in early enough in the process to really help the client keep connected and being able to work through it, because they actually have a lot of people that fall off of that go
Very much
through
so.
those workshops, because it's a lot for them to understand. You know, they're given all that paperwork, and now all of a sudden now they're like, okay, go find
Right.
a lender. And so I was hoping that they would start to bring the lenders in or introduce the lenders during the workshop or something, so that people could start working with the lenders sooner.
Yeah.
Because I believe that would help them retain more people and push it through. So they're great programs, because those are the programs that are really going to make a difference in what a buyer can qualify for.
Well, they go up to
You know, if you're getting
$210,000.
160,000 or 210,000 and with AC Boost, and then San Francisco,
500,000.
you know, it's 500,000 for that Dream Keeper, then, you know, that's definitely making a big impact on what you can qualify for. And so a lot of people, you know, some people that come to me, I always want to give a buyer hope, even if it's not their time right now. I want to, you know, give them hope so that they continue to work on home ownership. And so, AC Boost is the way to go, maybe. So I have to wait till next funding cycle comes up. But they're both interesting programs.
The one thing that
both of those, though, not to interrupt Sandra, but isn't there there's a payment back on this? It's an equity share, correct? Sandra, do you want to talk a little bit about that?
Well, I actually was also going to say, the one thing I want to emphasize, especially with the San Francisco program, is what we said in the beginning of this call, which was that the myths that need to be dispensed with that program, no, you have to be able to find sellers who are patient, because it takes time to close. They are very clear about a 90-day close, and they mean it. You won't be able to push and get it done earlier. And so that is a complication in a major way, because in this market, it's hard to find a seller that is willing to wait that long. And the equity share as well. There are people who think, hey, I'm getting this amount of money and I'm in San Francisco and I'm gonna, it's gonna appreciate, and then I'll have all this money and I'll be able to go. But that's not the case. It's a leg in, and you can't see it as this great investment where you're gonna come out rich, but it does get you in.
Mm-hmm. Yeah.
Pros and cons of down payment.
Exactly.
There's always something, right?
Right. It's a pro and con.
It is. So a couple of the questions that came up are also about interest rates with regards to first-time home buyer programs, how the Fed's raising rates has impacted both CalHFA, GSFA, and maybe Home Ready, Home Possible. Anybody want to kind of tackle rate as a challenge?
Well, I just like to speak up because there is such a misconception in the media, in a lot of cases, don't understand, so they perpetuate it. But the Fed rate, it does not directly influence long-term mortgage rates. They're completely different. And so the purpose of the Fed rate and them hiking it is to try to get control of inflation, which is what's allowing long-term mortgage rates to increase. Inflation is like the evil thing for long-term mortgage rates, because people are paying back, investors who invest in the mortgage-backed securities, they know that people are going to be paying that back with money that's worth less. So that's why the rates are kind of rising, because inflation is high. And inflation is high because there's more demand than supply. So what the Feds are trying to do by increasing the Fed rate, that's the only tool they have to try to slow the economy down and slow inflation down. And so that's why they're hiking that rate. That rate is the rate that all of the businesses and everything that is going on in the economy, contract, builders, everything, it affects all of that stuff. And what they're trying to do is slow everything down. Slow everything down. And right now, we're not kind of seeing that yet, but we will, because I think we just had a negative quarter when it comes
GDP,
to the gross national product. And two of those quarters, it means we're in a recession. So we're not seeing it yet, but the slowdown is coming. And with that, we'll probably see interest rates go back down, but it's going to be a few more months.
And to add to that, Renee, also, the last 2 years, or actually a little bit longer than that, the feds were buying mortgage-backed securities.
And
So that's
purposely
what
pushing
really,
that.
exactly. So they were buying mortgage-backed securities. And now as those bonds mature, they're not reinvesting that money into buying mortgage-backed securities. So that is what so the interest rates for mortgages are driven by mortgage-backed securities. So as if investors are buying mortgage-backed securities, rates will go down. So as the price goes up, rates go down. So when the Fed stopped buying, and they were buying, billions of dollars,
Right.
when they stopped buying, rates, shot up. And of course, investors want to put their money into stocks, but if stocks looks risky, they'll move it over to bonds, and that will drive rates down as well. So if money's going into bonds, rates will go down. So sometimes when the feds increase the Fed rate, mortgage rates actually go down a little bit when the feds increase. As a matter of fact, that happened just recently. We saw just a little bit of a decrease in the rate, yeah, a little bit. They go up faster than they come down.
Yeah.
Yeah. And today the bond market is, I'm sure all of us follow it, so it fluctuates every day. Explaining that to borrowers and buyers.
It's just like, just hold on.
Yes.
Just maybe we'll be able to refi you next year if you purchase now. You got
That's
to
right.
make the decision based on what you know now.
Exactly. And I know when I talk to a lot of my buyers, I say, look, rate's important, don't get me wrong, but it's also, how do you get to your payment? Does the payment work? Does the down payment work? And will it fit a sales price that you can purchase? So
Yes.
it's everything together, really. Right?
It is. And
Yes.
I think the other misconception is sometimes people think that they're going to see what happened in 2007 and 2008. Heaven forbid. But again, the issue is that if you looked long term at the cycles, what you see is that what happened in 2007 and 2008 was really an anomaly, because the crash of the real estate market is what forced us into a recession because of the bad mortgages. But normally what happens during a recession is that real estate prices actually do well. So although there might be a softening, there's not going to be a crash. So again, that's why you want to make that decision based on the information now, because in the long run, I think real estate prices are going to continue to increase, not at the amount that they have been,
Right.
but they will be, increasing, particularly in California, where we've kind of been different than the rest of the country. It's going to become more reasonable.
Well, it's good to hear. So a couple things here. We're getting up to about 15 minutes left, and closing comments would be fantastic from each of you. While the others are doing that, can each of us put our contact information in the chat box while one person is talking? That would be fantastic. In terms of closing and utilizing down payment assistance, educating realtors, however you want to make your final push to understand, helping people understand down payment assistance and affordable housing, let's give it a go here. Elva, do you want to start with that? Give your closing marks.
Okay, thank you everyone for listening, and we're all into assisting our buyers and clients into buying. I think the biggest thing for me is just having realtors understand how important it is for most of these buyers that are using down payment assistance and competing in the market against cash offers and people coming in with 20% down or even more. I think what I'd like to say is, as this market is starting to slow down, we can close down payment assistance programs, some of the programs just as fast as a regular conventional or FHA loan. I think that that's the one thing I would like to get across is to have a compassion and a heart. And it's up, and a lot of times the sellers, they're going to go by what their listing agent is going to share with them and put their input into each offer that they're looking at. So I would just say, have some compassion towards these first-time home buyers with down payment assistance. And yeah.
Excellent point. Excellent point. We need to bring back the human element to a lot of this, right?
Yes.
Renee, your closing argument or closing comments?
You know, I really appreciate being asked to be part of this panel and meeting these ladies and Sandra again, who I already knew. And it's about education, I think. I've been educated today because being around, them, I've learned a couple of things that I'm going to go back and take a look at. I knew about the Shanoa Fund, but I kind of, didn't like it because I understood that you had to pay the money back. But, there's a point, there could be a point useful for anybody. So I've learned, and I'm hoping that everyone that's been on this panel, but not the panel, but has understood, has been on the workshop, has learned as well. And I just want to stress education and caring, because I think if you care about the people that you are helping, then you're going to educate them. You're going to spend the time to listen to them, and you're going to educate them so that, the best choices can be made, because ultimately it's their choice, and
Yeah.
they understand what it is. So thank you.
Fantastic. All right, Sandra.
To piggyback off of Renee, I think that more forums like these are extremely needed, especially in this climate. People are fearful. There's so much negative press, and even walking in the streets, everyone is just doom and gloom. And down payment assistance is still a huge, huge, huge advantage to not only people of color, but buyers everywhere. The honesty is, most of my clients are not people of color, but I really, really, really want to see more programs being utilized, more programs coming out, especially here in the Bay Area. We need it. And I really want the realtors who are on this call to talk to their coworkers, to their colleagues, and impress upon them the need to communicate with lenders and to be a part of workshops like these, because education is essential. Thanks, Susanna.
Fantastic. All right, Kimberly.
Okay, so what can I say? All of the ladies on the panel hit every nail on the head. Again, we all have different experiences, different backgrounds. And for us, it's about making sure we're not only assisting our real estate clients, our partners in this, but really, really helping borrowers, helping community know what is available. Education is critical. And we just encourage all of the agents on this that participated in this workshop to definitely reach out to one of us or all of us and, take advantage take advantage of the knowledge and the experience, because that's what we're here for. We're here to help you close more deals. And we want to make sure everything is equitable. And if we can help people get into homes by providing a little assistance, we can help you present it to the listing agents so that they can understand, we can educate them. And I think that we will all be rewarded in the end. So yeah, reach out. Thank you for having me be a part of this panel, Susanna. I really appreciate it.
You and Sandra were the first people I thought of, and I know that Renee and Elva, you were invited from some of the other panelists or folks from the committee. And I definitely would love to keep in touch with all of you. I think that there are several topics throughout that we've touched on that really do need to be discussed further in other panels as well. And we need to dig deeper. Appraisals, credit, closing times, inspections, and maybe even just go over some of these programs itself. Daisy, I haven't used before. And to be honest with you, I was in my other panel that I was a part of, I met somebody from Luther Burbank and I went, hey, I haven't used this in a long time. What's going on? I didn't even know it was around. So really this networking piece, not only between us as well, but educating the realtors as to how these programs work is really vital and really important to success, not just for us, but these buyers and the realtors as well. Bringing back that human element of the transaction with these cash offers that have been there for these corporations. We need to bring that back in and understand that these folks are humans who are looking for a place to raise families, who are looking for a community and that pride of ownership. So yes, fantastic, all of you, great job. I'd love to start networking with every single one of you. Yes. Please, stay in touch. I know Kimberly, every now and then your name pops up in my email, and Sandra, we're right next to each other in the office, bugging each other and hitting each other with the elbows. So Elva, fantastic. I loved hearing your stories. And Renee, you have got a really great way of working with the buyers and putting things together. Your success stories were wonderful. So thank you all very much. If there's any more questions, let's take one quick look here. Or is everybody feeling good? We can wrap this up. We've got 5 more minutes.
Well, let me throw out there, I'd mentioned there's down payment assistance for 580 credit score. Oh, and then I wanted to, Sandra, with the Chenoa, depending on the income, there is a forgivable second. So if you're over the income limits, then you make a monthly payment. But if you're within the income limits, you don't have to pay back that second loan. And the same with this 580 credit score down payment assistance is very similar to Chenoa. So it's great to see they're lowering the credit scores with down payment assistance.
Well, remember back in the day, this is when we're telling our age, but remember back in the day when you had an FHA loan, you automatically got the 3.5%.
Yes.
Remember that?
Yes.
It's almost like, yeah. So, I mean, it's great. This is good.
And yes, those are Chenoa, and the Max One is that program with the 580. So Chenoa goes to 600 and you don't have to be a first-time home buyer, but they both have to be combined with the FHA loan. And so, yeah, it is similar. And so the second mortgage, depending on your income, is either forgivable or not. And if it's not forgivable, it's paid back over 10 years at 2% higher than the interest rate on the first. Okay. Yeah, so there's options. It's both of those are good backup programs. I mean, I only go to those if they don't qualify for Cal half up.
Or the other ones.
Okay. Yeah, because the other ones have better rates.
Yeah, they do. They do.
Yeah. But the Max One and the Max One Plus will go by you can have 47-57 debt to income ratio. So that's why that's a good program too. So no income limits, DU approval. If it approves it at 60 DTI, which is not going to happen, but if it did, it would be okay. So it's typically what I see you can get through is 47-57 47 front end, 57 back end.
Yeah,
And
you're
you can
not
do
gonna
that.
get an
Wow.
approval for FHA if your front end is over 47.
Right.
That's right.
You won't
That's
get
right.
it.
That's
You
right.
won't get it.
But your back can be 57 for both
Yeah.
of those programs with that 600 credit score. Yeah.
Great. Well, I'll be reaching out to you, Alpha.
Yeah, definitely.
Well, and I'm going to be
reaching
reaching
out to
out to
all
you guys because you guys have programs that I don't do. I'll just refer them to you. Like I don't do AC boosts and some of the stuff that you mentioned. So I think we can work together.
Yeah.
Well,
Absolutely.
fantastic. For those of you who have been listening, a lot of this information will be gathered together, and we will be sending out information following this so that you will have all of our contact information again, as well as any of these programs. If you're really specifically wanting one or the other, like Chenoa, you've got Elva. And then we've got Renee with her suite. We got Kimberly, Sandra, myself. Please feel free to reach out to all of us. This has been a fantastic and eye-opening discussion. And again, I will take this back to the board and we will get some more panels together. Let's see what we can keep on going.
Oh,
That's
thank
great.
you.
Thank you,
Thank you.
Susanna.
Thanks, Susanna.
Nice meeting you guys, Elva and Kimberly.
Yes,
Yeah,
same
thanks for
here.
Cool.
Well, I've got your email now on that group
Yeah.
email, so I'm going to reach out and connect with you guys.
Absolutely. Please
Perfect.
do.
Yeah, I saved it. I got it.
All
Yeah.
righty.
And thank you,
Thank
Bridge
you.
Association.